Cryptocurrency has become an increasingly popular investment option in recent years. In this video, we will provide an overview of the basics of investing in cryptocurrency for beginners, including the technology behind it, the risks and benefits, and the steps to take to get started. Cryptocurrency is a digital or virtual currency that uses cryptography for security. Bitcoin, the first and most well-known cryptocurrency, was created in 2009 by an unknown person or group using the pseudonym Satoshi Nakamoto. There are now thousands of different cryptocurrencies, each with their own unique features and uses. Before investing in cryptocurrency, it's important to do your research, including researching the different types of cryptocurrencies available as well as the technology behind them. Cryptocurrency is a high-risk investment due to its volatility and lack of regulation. It's important to familiarize yourself with the potential risks of investing in cryptocurrency, such as market volatility and the lack of regulation. However, for those willing to take on the risk, cryptocurrency can offer the potential for high returns. Decide on which coin you want to invest in by considering factors such as market capitalization, trading volume, and overall community sentiment. Diversification is also a good strategy. You don't have to put all your eggs in one basket. A cryptocurrency wallet is a digital wallet that allows you to store, send, and receive digital assets. There are several types of wallets available, including software wallets, hardware wallets, and paper wallets. Research and choose the right wallet for your needs. Purchase your chosen cryptocurrency on an established cryptocurrency exchange. Cryptocurrency exchanges are online platforms that allow you to buy, sell, and trade digital assets. Some popular exchanges include Binance, Coinbase, and Kraken. When using an exchange, ensure to properly secure your account with two-factor authentication and a strong password. And don't forget to withdraw your funds to your personal wallet after your trade. As you get comfortable with the process of buying, selling and holding crypto, you can start learning about advanced trading strategies such as limit orders, stop losses and margin trading. This will allow you to maximize your profits and minimize your losses. Investing in cryptocurrency can be a great way to diversify your portfolio and potentially earn high returns. However, it's important to approach the market with caution, as the high volatility and lack of regulation can make it a risky investment. It's crucial to do your research, have a strategy, and understand the risks involved. It's important to keep in mind that investing in cryptocurrency is a high-risk endeavor, and you should only invest money that you can afford to lose. It's also important to keep a long-term perspective, as the cryptocurrency market can be extremely volatile in the short term.